Good morning and welcome to this month's OakCrest Insight, everybody. So today I want to talk about taxes, specifically what our team learned this past tax season and how you can use that information to be more proactive throughout the year. Now, here at OakCrest, taxes aren't just something we look at one time a year. Our team is focused on tax planning every day for our clients. And this season gave us some really helpful insights. So let's start with some good news, right? The one big beautiful bill that was passed last year in 2025, it actually pleasantly benefited a lot of our clients. So in fact, according to the US Treasury, the average American saved around $800 this year filing taxes. So one of the biggest benefits we saw was the additional senior bonus deduction. That's an additional $6,000 per person for those over age 65 if they qualified on their income. So over 30 million Americans qualified for this back in filing their 2025 taxes, and many of our clients saw a meaningful savings from it. We also saw a big impact from the elimination of taxes on tips and overtime, which helped a number of clients who fall into those categories. And a smaller one, but still worth noting, was the auto loan interest deduction for new cars assembled here in the US. So, if you're purchasing a new vehicle and financing it, make sure to ask about this and keep your documentation for taxes. Now, on the flip side, what caused people to owe more this year, right? So if your accountant told you, hey, you owe, here's a couple reasons potentially why. A big one we saw, Social Security. Many people either started benefits or saw increase in their Social Security, but up to 85% of Social Security can be taxable depending on your income. And often, we saw, no taxes are actually being withheld automatically from this. That can create a surprise at tax time. If that applies to you, you can set up withholding, use a W-4V form, and choose a percentage like 7, 10, 12, or even 22%. The other area we saw frequently was income with no withholding. Things like interest, dividends, and capital gains that really surprised a lot of people like that. So if you have CDs or brokerage accounts generating income, that can quickly add up. Now, our investment team here works to manage this as tax efficiently as possible, but not all advisors factor in taxes when making investment decisions. So it's something worth reviewing on your investments. So what's the takeaway? Don't think of taxes as a once-a-year event. If you're going through a major life change, right? Think about, am I retiring? Is it a job change? Am I starting Social Security or taking distributions from retirement accounts? Or maybe I inherited money. That's a time to have a conversation with either us or your accountant. Being proactive can make a big difference versus reacting at tax time. One final point, estate taxes are becoming more relevant for more families. Now, at the federal level, the exemption is around $15 million. But here, if you're a resident of Illinois, it is only $4 million. So we're actively working with many families right now to plan around this because it can result in significant taxes if not addressed properly. Now, the bottom line here, tax planning is ongoing and our goal is to help you stay ahead of it, not surprised by it. So we'll continue to keep you updated throughout the year if there are changes that happen that could impact you. I hope this was helpful, and we look forward to seeing you next month on OakCrest Insight.